Pro John Ag here. If you thought the recent drop in silver prices was normal market volatility, get ready for a massacre that was planned to make people panic. Silver has down over 11%, which is its longest losing run in 2 years. MCX suffered a Rs 2,000 decrease in just one session. That's not a blip. That's a lightning strike throughout the whole silver market. ETFs, on the other hand, saw $2.2 billion in paper outflows, which made it seem like everyone's selling. But here's the kicker. Demand for tangible goods is still startlingly high. The corporate media keeps saying, silver is falling because demand is weak, the economy is slowing, and retail panic selling is causing the collapse. Headlines propel the story like a wrecking ball, making regular investors sell their stocks and lose money. But anyone who only looks at figures on a screen is falling right into the trap. The fact they don't want you to know is that retail is the victim and smart money is discreetly stacking ounces. ETF outflows don't mean that silver is weak. They're just a forced sale of paper contracts meant to terrify the public while insiders buy at a low price. Every time a retail trader panics and sells, the whales get a deal. Do you see all the red candlesticks on your chart? A siren is telling you that you're in the wrong place. Now, put the pieces together. COMEX futures open interest is still unusually high, even though the price is falling. That means the paper market is still full of people, still being deceived, and still acting like there isn't a shortage. The main story is happening behind the scenes, even while retail prices are down. Shanghai silver trade indicates premiums of 5% to 8% above the NY spot price. This means that East Asia is secretly buying real ounces at a huge discount relative to the manipulated West pricing. The market you see is artificial. It's a staging for a controlled panic that keeps the system running. The worst part is that retail traders are freaking out and selling off their stocks, which has caused a 5-day 11% decline. In the meantime, the whales, banks, hedge funds, and shady wallets are secretly buying silver from ETFs, vault withdrawals, and futures contracts. They don't just purchase. They first change the story to make people scared, confused, and feel like everything is falling apart. As the crowd loses faith, smart money quietly gets ready for a squeeze that might wipe out anyone who still has paper. Let's speak about the numbers now. $2.2 billion in ETF withdrawals doesn't suggest silver is weak. It means banks are pushing people to sell their paper contracts, which are flooding the market with contracts that don't touch a single physical ounce. Retail sales go down, prices go down, and the manipulators smile as they buy genuine ounces at prices that are too good to be true. The system is rigged, the trap is prepared, and only people who know the difference between paper and real silver can get through this planned storm. The East versus West division is the layer that most people miss. New York and London are losing paper, but Shanghai's premiums are rising, physical vaults are emptying quickly, and central banks in Asia are quietly stacking ounces that the manipulated West price will never touch. This isn't a coincidence. It's a planned buildup that the mainstream media can't see. Retail panics, whales gather, and the East quietly hoards. The volume tells the same thing. Futures contracts are still too big, ETFs are leaving, and demand for actual goods is rising. The gap between what is written down and what is actual has never been larger. Anyone who trades without knowing this is setting themselves up for failure. Every solitary red candle is a well-planned way to terrify people. Every headline that screams panic is a siren meant to scare people into buying things and make money for those who know how to play the game. If you believe this 11% decline and $2.2 billion in ETF outflows is the whole story, you're wrong. Here's a hint for what's to come. The real shocker is that the COMEX and London vaults are running out of inventory. It's only a matter of time before these empty vaults run into East Asian accumulation. When that happens, the following step will blow up the paper market, and retail holding contracts will be left with nothing but losses. What you're seeing isn't a market correction. It's a planned robbery between retailers and whales, paper and tangible, and East and West. And the next section of the story? How the COMEX and London vaults are disappearing right in front of your eyes, and why every ounce you see on your screen is fake. But if you think the panic was only a 5-day decline in prices, wait till you see the vaults running out of money. The amount of silver that is registered with COMEX is down about 75% from its highs in 2020, and what's left is hardly enough to cover a small number of open contracts. London and Shanghai vaults are seeing major withdrawals, which is a quiet exit of genuine metal from the market. And the East isn't waiting. The Shanghai premium is 5 to 8% higher than the NY spot price, which is a clear evidence that people are hoarding actual silver while the West freaks out. The kicker is that paper still gets a lot of attention, but the main game is happening in real life. Futures contracts set the price on screens, but the gap between them and real supply has never been bigger. Prices are low not because silver is poor, but because the manipulators control the story and the metal itself disappears from accessible vaults. Retail sees prices going down, thinks the market is crumbling, and sells out of fear. Meanwhile, the smart money discreetly accumulates ounces in warehouses and ETFs. Now, put the pieces together about the bad guys. There are rumors that JP Morgan and BlackRock are selling paper contracts instead of real silver to keep prices low. The Fed and US banks make this worse by making the dollar stronger and the economy less stable, which makes silver look risky to retail investors, while insiders buy cheap ounces. Every fake price drop and misleading headline is a sign for retail to panic and for the whales to buy more metal at bargain prices. This is where the bait and switch becomes scary. ETFs and paper contracts are leveraged tools that let banks say oversupply without ever touching the physical metal. The slump in the market makes stores sell, prices drop, and still physical silver discreetly transfers into the hands of those who control it. What a twist! Traders are giving money to the people who really control the supply of the metal while they watch red candlesticks. History tends to repeat itself. Before the worldwide QE injection in 2008, gold and silver prices were kept low. Retail investors lost money while insiders made money. Fast forward to 2020 when FTX went down. Again, retail lost money while whales moved their money around. Now, the same thing is happening. The disparity between paper prices and physical silver is getting bigger. Retail panic is setting in as the West sells out, the East is discreetly buying up, and insiders are managing the flow without anybody seeing it. Every panic sell, every ETF outflow, and every futures contract that is placed into the market is meant to help people get more real silver. It's not volatility. It's a planned squeeze meant to trick and trap retail. The paper market is a lie. The physical market is a war. And anyone who doesn't pay attention to the vault data is heading into a storm without knowing it. And here's the part you need to pay attention to. The story doesn't finish in the US. While retail panics and whales mount up silently, East Asia is buying up what the West is getting rid of. Shanghai premiums, physical hoarding, and central bank accumulation are all parts of a global silver war that no news outlet will cover. The following phase shows the geopolitical shift, where East versus West flows, hidden buyers and policy changes start to change the rules for collecting silver, and retail has no idea what's going on. The West is dumping, but East Asia is secretly hoarding, paying 5 to 8% more than NY spot prices to get actual silver that no one else can touch. ETFs show outflows, futures show artificial liquidity, but the real metal is disappearing into vaults in Shanghai, Hong Kong, and other Asian cities. This is global arbitrage. The West is losing paper, and the East is hoarding tangible goods. The price difference is screaming the truth. The system is rigged. The secret buyers aren't stores, though. Central banks, sovereign wealth funds, and anonymous wallets are quietly adding silver to their holdings. This isn't newsworthy, but it shows up in vault withdrawals and premium rises. Every ounce that leaves Western hands makes Eastern control stronger. Every paper contract they sell helps them reach their goal of getting more money. People are panicking over red charts, but the true power shift is happening quietly. Now put the pieces together. Fed signals, a strong dollar, and possible sanctions aren't just big news. They're also ways to make paper declines happen in the West. A quick shift in US policy, even just a hint of a rate hike or a sanction, may cause another planned drop, causing panic among retailers as insiders secretly buy more. Every news and policy change is like a chess move in a global game that most traders don't even know about. Delays in mining and production make the pinch worse. Real silver isn't printed like paper contracts. There isn't enough of it, and the price is kept low on purpose. This structural strain is making paper contracts and real metal more tense than ever before. Futures markets say there will be plenty, but vaults tell a different story. Ounces are disappearing. East versus West accumulation is happening, and retail is left chasing shadows. And this is where it gets even more important. The buildup in Asia and through ETFs is quietly threatening the dollar's dominance in commodities. When people want something, it changes the balance of power without anybody saying anything. This threatens the dominance of paper contracts that Western markets depend on. The more East stacks, the less believable the West paper illusion becomes. This sets for a shock in the future when reality eventually catches up. The pattern is very clear: paper suppression, panic in stores, hoarding in the East, and stacking by the central bank. And everything comes together to reveal one undeniable truth. The West is losing metal, the East is stockpiling it, and the price of metal will eventually break. This leads to an unavoidable conclusion for the world economy, and it's not good for anyone who still has paper contracts. The macro gloom, debt traps, and the Fed's crazy printing are about to hit this physical squeeze, and retail is in the middle of it all. Debt levels are skyrocketing, and silver isn't safe. The U.S. national debt recently went over $35 trillion. Japan's bond yields are rising to 0.8%, and the world's total debt is above $350 trillion. Every asset class is being squeezed by rising rates, persistent inflation, and escalating fiscal stress. But here's the twist. Silver, the physical metal, is slowly becoming the sole safe place to hide. While stores are worried about paper pricing, the basics are saying there isn't enough of it. The Fed is stuck, and here's the kicker. Inflation won't budge, therefore they have to keep creating money even when the markets are worried about another rate hike. This is the perfect storm. Paper contracts are held down, futures are manipulated, and ETFs are sold off. But people who own actual gold discreetly accumulate ounces at fire sale rates. Retail sees red candles and thinks the metal is weakening, so they sell into the trap. At the same time, insiders are putting together actual silver that isn't affected by paper games. And don't get me wrong, the system is broken. Retail is stuck with paper contracts, banks and whales control access to the real metal, and every engineered decline adds to their hoard. ETFs and futures are ways to manipulate the market. Every panic in the West is a way for people in the East to get more physical ounces. The funny thing is, if you don't pay attention to vault data and premium spreads, you can end up with contracts that aren't really backed. The facts tell the tale now. With Shanghai premiums of 5 to 8%, COMEX and London vault withdrawals, and ETF outflows totaling $2.2 billion, silver is ready to make a big comeback. Once East demand outstrips the limited supply of paper, a 10–15% rise is not only plausible, it's likely. Short-term drops will keep retail on edge, which is a great time for wise money to buy. Get out of banks. This is your wake-up call. Stop believing what the papers say and keep your gold and silver safe yourself. The time to safely build up is running out, and the next planned drop might leave stores vulnerable. You can't delete physical metal, but you can and will change paper contracts. They can erase your paper, but they can never take what you really own. Physical freedom is possible, and silver is the key. If you believe the price chart was the end of the narrative, think again. The combination of economic dread, East versus West accumulation, and panic caused by the Fed is creating the conditions for a historic silver squeeze. Retail is blind, banks are in charge, and people who own tangible assets are quietly getting ready to get what paper manipulators are trying to hide. Now the question isn't whether silver will go up, it's who will survive the imminent collapse of paper illusions and come out with real riches. This isn't just about silver, it's about freedom, power, and control. Listen intently. The banks, the Fed, and the manipulators can scare retail, dump paper contracts, and push prices down, but they can't impact what you have in your hands. Every ounce you hold and every gram you keep in your vault is a protection against the chaos they create. It's your turn. Don't wait for the next crash to make you act. Take care of your own silver and gold right now. Stop believing what you read on paper. Don't freak out with the crowd. Before the next manufactured decline happens, it's time to act. Engage. Let me know in the comments if you're accumulating physical silver, ETFs, or still stuck in paper contracts. Let's find out who is playing wisely and who is giving the system what it wants. Share this. If this tale made you realize how deep the deception goes, tell anyone who is still in the dark about the paper trap. Everybody you warn could save thousands of dollars by not getting scared or tricked. Final thought. They can erase your paper, change your charts, and lie to the press, but they can't take what you really possess. Silver in its physical form is more than just money. It's independence, sovereignty, and power in a world that wants to make you impotent. Stay sharp, stack wisely, and always remember, the true game is hidden, and only those who can see it will live.